Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ZHEJIANG SHIBAO Company Limited annual report. ZHEJIANG SHIBAO Company Limited is a leading provider of automotive steering systems and accessories in China. The company offers a wide range of products that cater to various needs of the automotive industry. The company's product portfolio includes electric power steering (EPS) products, which are designed to provide improved fuel efficiency and reduced emissions. These products include electric power manual recirculating ball steering gear, electro-hydraulic power recirculating ball steering gear, double pinion-assisted EPS, rack-assisted EPS, and column-assisted EPS. In addition to EPS products, the company also offers intelligent steering products that utilize advanced technologies such as steer-by-wire steering, lane-keeping aid, rear wheel steering, and fully redundant electric hydraulic and dual motor redundant EPS. These products are designed to enhance safety and driving experience. The company's product line also includes hydraulic power steering gear products, which include dual-circuit hydraulic power recirculating ball steering gear, hydraulic power recirculating ball steering gear, and hydraulic power rack and pinion steering gear. Furthermore, the company offers manual steering gear products, including manual recirculating ball steering gear and manual rack and pinion steering gear. In addition to these products, ZHEJIANG SHIBAO Company Limited also provides a range of steering parts, such as electric four-way adjustable steering column, intermediate shaft for passenger cars and commercial vehicles, four-way adjustable steering column for commercial vehicles, steering knuckle and cylinder, pitman arm, hub bracket, manual four-way adjustable steering column for passenger cars, and ECU. The company's casting products are also part of its offerings. Overall, ZHEJIANG SHIBAO Company Limited is a comprehensive provider of automotive steering systems and accessories that cater to the needs of automobile groups in China. ZHEJIANG SHIBAO Company Limited market capitalization of 17 billion is significantly larger than the average industry peer of roughly 3 billion. This shows that ZHEJIANG SHIBAO Company Limited holds a significant advantage in their industry. ZHEJIANG SHIBAO Company Limited trades at a higher price-to-earnings ratio of 22 times, and a higher price-to-book ratio of 1.95 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 45% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth are multifaceted and can be attributed to several key factors. Firstly, an increase in domestic sales has contributed significantly to revenue growth. Additionally, the expansion of steering system and parts sales, as well as vehicle package sales, have also played a crucial role. Furthermore, the sales increase in automotive components products by 36.21% and the corresponding increase in production by 37.4% have been major contributors. On the other hand, the primary drivers of revenue decline are largely external factors. The adverse impact arising from changes in the external environment has worsened, leading to a decline in revenue. Weak consumer confidence and a lack of internal motivation for automobile consumption have also contributed to this trend. Furthermore, intensified industry competition has put pressure on profitability, exacerbating the decline in revenue. The net income of the company experienced a significant increase, rising by 19% to $201,147,082.53, and also by 31.76% to RMB 3,548,952,008.2. This substantial growth in net income is a positive indicator for the company's financial health. However, despite the increase in net income, profit margins showed mixed results. The operating profit margin and profit margin remained relatively stable at 5.44% and 5.39%, respectively. On the other hand, the gross profit margin decreased from 20.94% to 18.54%. This decrease in gross profit margin suggests that the company may be experiencing inefficiencies in its production or pricing strategies. The reasons behind these changes are not explicitly stated, but it can be inferred that the company's growth is driven by factors other than cost control and efficiency. The stable operating and profit margins suggest that the company's core operations are performing well, but the decrease in gross profit margin indicates a need for improvement in its production or pricing strategies to maintain profitability. The company's financial performance is a notable aspect of its overall success. One key indicator of this is the generation of positive operating cash flow. The data provided shows that in 2025, the net cash flows from operating activities reached RMB 234,239,928.18, marking a significant increase of 19,982.62% compared to the previous year. This substantial growth in operating cash flow is a clear indication that the company is generating sufficient funds from its core business operations. The fact that this figure is positive also suggests that the company's financial health is strong and it has the ability to meet its short-term obligations. Overall, the generation of positive operating cash flow is a crucial aspect of a company's financial performance, and in this case, it indicates a healthy and thriving business. The company's debt levels have experienced significant changes over the past period. Specifically, short-term borrowings increased by 35% to $109,488,226.66, while notes payable rose by 27%. Accounts payable also saw a substantial increase of 31%, contributing to a total current liability rise of 31%. Furthermore, non-current liabilities surged by 45%, and total liabilities grew by 32%. However, the interest expenses have shown a contrasting trend. According to the data, interest expenses decreased from $4,130,493.62 to -$409,228.80, indicating a substantial reduction in interest payments. This decrease is also reflected in the total interest expenses, which declined significantly. Additionally, loans and borrowings saw a notable decrease of 34.8% on page 16. The company has a history of paying dividends to its shareholders. According to the financial records, in one instance, each share was paid RMB 49,357,943.04 as dividend. This indicates that the company prioritizes returning value to its investors through dividend payments. However, there is no information available regarding any share buyback activities by the company. Despite reviewing multiple pages of financial summaries, no mention or data related to share repurchases were found. Inventory buildup and supply chain disruption concerns. There is a growing concern regarding the accumulation of excess inventory in various industries. This issue can have far-reaching consequences, including wasted resources, reduced efficiency, and increased costs. The potential for inventory buildup to disrupt supply chains is also a pressing concern. The risks associated with inventory buildup are multifaceted. Excess stockpiles can lead to storage and handling challenges, as well as the need for additional space and equipment. Furthermore, inventory that is not sold or utilized within a reasonable timeframe may become obsolete, resulting in significant financial losses. Supply chain disruptions can also occur when inventory levels become unsustainable. This can happen when manufacturers overproduce, leading to a surplus of goods that cannot be distributed efficiently. As a result, supply chains may experience delays, shortages, and other issues that can have a ripple effect throughout the entire system. To mitigate these risks, companies must adopt more effective inventory management strategies. This includes implementing just-in-time production methods, improving forecasting techniques, and optimizing storage and distribution networks. By taking proactive steps to manage inventory levels, businesses can reduce the likelihood of supply chain disruptions and minimize the associated costs. That concludes the financial summary for ZHEJIANG SHIBAO Company Limited. Feel free to comment below, and I will be happy to answer them when possible.